Cryptocurrency: Unveiling the Digital Financial Revolution. Introduction. The emergence of cryptocurrency has sparked a technological, economic, and societal revolution that challenges conventional notions of money, finance, and trust. Cryptocurrencies are digital or virtual currencies that use cryptography for security and operate on decentralized networks based on blockchain technology. Since the advent of Bitcoin in 2009, the cryptocurrency landscape has expanded exponentially, giving rise to a diverse range of projects, tokens, and applications. This comprehensive exploration delves into the foundational aspects of cryptocurrency, including its history, underlying technology, economic implications, regulatory challenges, adoption trends, potential risks, and the broader implications for the global financial landscape. Genesis and evolution. The creation of Bitcoin by the mysterious Satoshi Nakamoto in 2008 marked the genesis of the cryptocurrency revolution. Nakamoto's white paper, Bitcoin, a peer-to-peer electronic cash system, introduced the concept of a decentralized digital currency that could facilitate secure and borderless transactions without the need for intermediaries. Bitcoin's success paved the way for the development of other cryptocurrencies, often referred to as altcoins, each with its unique features and use cases. Blockchain technology, the backbone of cryptocurrencies. At the heart of most cryptocurrencies lies blockchain technology, a distributed and decentralized ledger that records all transactions in a transparent and tamper-proof manner. A blockchain consists of a chain of blocks, each containing a set of transactions. These transactions are grouped, verified, and added to the blockchain through consensus mechanisms like proof of work or proof of stake. The transparency and immutability of the blockchain provide a novel solution to the long-standing double spending problem, enabling secure digital transactions without the need for intermediaries. Cryptocurrency categories and use cases. Cryptocurrencies can be categorized into different types based on their underlying mechanisms and intended use cases. While Bitcoin and its derivatives primarily focus on being a store of value or medium of exchange, other cryptocurrencies have more specialized purposes. Stablecoins are pegged to real-world assets to maintain price stability, making them suitable for transactions. Utility tokens grant access to specific services or functionalities within a blockchain ecosystem. Security tokens represent ownership or assets and comply with regulatory frameworks. Economic implications and monetary policy. The economic implications of cryptocurrencies are multifaceted. Bitcoin's limited supply of 21 million coins challenges the inflationary nature of fiat currencies, making it a potential store of value. Cryptocurrencies also introduce programmable money through smart contracts, enabling self-executing agreements without intermediaries. However, the volatility of cryptocurrency prices has raised concerns about their suitability for everyday transactions and their potential impact on economic stability. Adoption and market trends. Cryptocurrency adoption has experienced significant growth, driven by factors such as technological advancements, financial inclusion, and distrust in traditional financial systems. While retail adoption remains a driving force, institutional interest has surged in recent years, with established financial players entering the space. The integration of cryptocurrencies into payment systems, investment vehicles, and decentralized applications, DApps, is reshaping various industries and paving the way for new business models. Regulatory landscape and challenges. The decentralized and pseudonymous nature of cryptocurrencies presents regulatory challenges for governments worldwide. Regulatory responses vary, ranging from embracing cryptocurrencies as a legitimate asset class to imposing bans and restrictions. Striking a balance between fostering innovation and ensuring consumer protection, financial stability, and preventing illicit activities is a complex endeavor. Security and risks. Cryptocurrencies have introduced novel security paradigms, but they are not immune to risks and vulnerabilities. Cyberattacks on exchanges, wallet breaches, and phishing scams have exposed users to significant financial losses. Regulatory uncertainties, token vulnerabilities, and the potential for market manipulation also pose risks to the cryptocurrency ecosystem. Environmental concerns and energy consumption. Proof-of-work cryptocurrencies, like Bitcoin, have faced criticism for their energy-intensive mining processes. The environmental impact of energy consumption in cryptocurrency networks has led to debates about the sustainability of blockchain technology. Efforts are underway to explore more energy-efficient consensus mechanisms like proof-of-stake and to develop eco-friendly blockchain solutions. Broader societal implications. Cryptocurrencies have far-reaching societal implications beyond finance and technology. They challenge the traditional role of centralized institutions, enabling individuals to have direct control over their assets and transactions. Cryptocurrencies also empower financially underserved populations, offering them access to the global economy. However, they also raise questions about privacy, surveillance, and the potential for new forms of digital divide. Future trajectories and innovation. The future of cryptocurrency holds promises of continued innovation and disruption. Second-layer solutions, like the Lightning Network for Bitcoin, aim to enhance scalability and transaction speed. Cryptocurrencies are also pushing the boundaries of decentralized finance, DeFi, allowing for peer-to-peer lending, automated trading, and synthetic assets. As central banks explore the concept of central bank digital currencies, CBDCs, cryptocurrencies' interaction with traditional finance will further evolve. Conclusion. Cryptocurrency has ushered in a new era of digital finance, challenging traditional paradigms while offering innovative solutions to long-standing problems. From its humble beginnings with Bitcoin to the flourishing ecosystem of diverse cryptocurrencies, the technology has transformed how we conceptualize and engage with money, transactions, and trust. The path ahead is marked by regulatory debates, technological advancements, and the ongoing tension between innovation and stability. As cryptocurrencies continue to evolve, their impact on global finance, society, and the very nature of trust will remain at the forefront of the digital revolution.